For the last 2 weeks, the euro has been trading sideways. The pound sterling has also been hovering near the same levels, though just for 1 week. However, the overall situation is almost the same. Even the Fed's decision to raise the benchmark rate to 1% from 0.5 failed to affect the market. The fact is that traders were ready for such changes. However, today the situation may change dramatically. Today, forecast for the US inflation may meet the reality and the price growth may slacken for the first time since August 2021. If the predictions come true, it will mean that the US economy has started to stabilize. Under the current conditions, the news may strongly encourage market participants who are likely to begin buying the greenback as a currency of the country whose economy looks better compared to other economies. Notably, the US dollar has been gaining in value since the end of the spring, early summer of 2021, when it became obvious that the Fed would tighten its monetary policy. As a result, the regulator has launched the biggest program of the key interest rate hike in the last decades. However, a rapid rise in the benchmark rate was spurred by surging inflation. Before the recent FOMC meeting, most analysts had expected the Fed to raise the benchmark rate by 0.75%. Nevertheless, if inflation starts slackening, the US regulator may decide to tighten its monetary policy at a slower pace. The Fed may start rising by 0.25% instead of 0.50% and not at every meeting. Although by the end of the year the interest rate will exceed the current levels, it will hardly be as high as expected earlier. 2 months ago, the US Fed published its key interest rate forecast for the end of the year. It foresees the benchmark rate within the range of 2 or 3%. Judging by the inflation growth pace, most analysts supposed that the key interest rate would hit the upper limit of the range. In a case of slower inflation, the benchmark rate may hit only the lower limit. This, in turn, will have a negative influence on the US dollar since traders have priced in a bit higher interest rates. What do we see on the trading charts today? The euro-dollar pair has been trading within the channel of 1.05 and 1.06 for 2 weeks in a row. The pair regularly breaks one limit after another, and the long-lasting hovering within the one range points to the uncertainty among traders. And this auction may cause a new wave of speculative activity. The stagnation may end soon, and the current price levels may attract speculators. Against the backdrop, traders should use a breakout strategy. Buy orders could be considered if the price consolidates above 1.0636 on the 4-hour chart. Sell orders could be initiated if the price settles below 1.0470 on the same time period due to the numerous breaks of the limit located at 1.05. Meanwhile, a decrease in the pound-dollar pair became slower after the price approached the support level of 1.2250. As a result, the pair rebounded and stagnated. The price stagnation is just a local phenomenon. Under the current conditions, the key levels are located at the support level of 1.2250 and the recent rebounds peak at 1.2405. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.